Did you receive the letter in an email from the Social Security Administration about taxes? Well, this is causing a lot of confusion among seniors. So I am going to tell you what the letter is saying and really tell you what the real deal is. What is the truth behind the letter? And I am going to talk about the big, beautiful bill and homeowners. We've been receiving comments about how the big, beautiful bill affects homeowners. So I've done the research and I'm going to walk you through specific things that are in the bill that are supposed to bring relief to homeowners. Now, the president promised no tax on Social Security. They did something else in the bill. I am going to walk you through that. And then finally, the Social Security trustee is saying that the Social Security Trust Fund is running out of money in 2033. But here's the truth. I'm going to tell you the real reason why Social Security is in trouble and what they are hiding from you. My name is Kwame Kwade. I am a government benefits expert for 15 years. We've been creating content around Social Security, Medicare, Medicaid, food stamps, and any personal finance issue that affects seniors. If you are new here, I am glad you're here. Welcome. And do me a favor, go into the comment section and let me know your city and your state. Now, if you've been watching this channel for a while, welcome back. I am glad you are here. So there's a lot to cover, so stay with me. Let's get to the email that the Social Security Administration sent that is causing a lot of confusion. First, let me share with you what the news organizations are saying regarding this email because it created quite a stir. So I am going to go to what we are seeing from news organizations. So if you search the Social Security email, here is MSNBC, Deceptive Social Security Administration email. Axios is saying the Social Security email about the big, beautiful bill explained. The New York Times, the Social Security email says Trump's policy ends bill on taxes. Does it? So everybody is trying to figure out why did the email go out, because it is actually very misleading. And other news channel, I like what Fortune was saying about it. So Fortune is saying Social Security sent incorrect email saying big beautiful bill ends taxes on Social Security. Kiplinger, Social Security email about big beautiful tax changes sparks confusion. So what is, and then you have Newsweek, Social Security email causes anger, blatant political statement. So what is this about? Well, I have the details. So essentially, I also received the email because I am a subscriber to the Social Security email. And so I received this email on July the 4th, and I read it and I was scratching my head thinking, okay, this is not accurate. This is actually not what happened. So here's the email that I received in my inbox. Social Security applauds passage of legislation providing historic tax relief for seniors. Well, that is not all. It went on to say that the Social Security Administration is celebrating the passage of the One Big Beautiful Bill, a landmark piece of legislation that delivers long-awaited tax relief to millions of older Americans. Now, I am going to explain to you why 50% of seniors are not in this bill. The relief that the Social Security Administration is talking about going to millions of older Americans does not apply to 50% of seniors in low income bracket. But the email goes on to say the bill ensures that nearly 90% of Social Security beneficiaries will no longer pay federal taxes on their benefits, providing meaningful and immediate relief to seniors who have spent a lifetime contributing to our nation's economy. There are two things in here that needs to be clarified. The first thing is that the bill does not cover 90% of seniors. It covers 80% of seniors, and there's been independent organizations that have confirmed this. But the second thing says that it's immediate relief, and that is also not correct. The bill provides a $6,000 tax credit that allows you to deduct once you file your taxes. If you make up to $75,000, or as a couple you make $150,000. So to say that it's immediate relief is not correct, because it is a tax credit that you have to wait till 2026 when you file your 2025 taxes in order to claim. And this is the commissioner. This is a historic step for American seniors. For nearly 90 years, Social Security has been a cornerstone of the economy for older Americans. By significantly reducing the tax burden on benefits, this legislation reaffirms President Trump's promise to protect Social Security and help seniors enjoy a better retirement that they've earned. Now, here's the thing. The bill does what it says. It helps seniors, but it doesn't help all seniors, and it's not immediate, and it does not really do what the president originally said he was going to do, which is eliminate taxes on Social Security. Doing something for 80%, or that covers 80% of seniors who pay taxes, versus 100% is a different thing. So does the bill help? Yes. Does it help all seniors? No. Does it help majority of seniors? Yes, it helps 80% of seniors who are already filing taxes and paying taxes on their Social Security. So it goes on to say the law includes a provision that eliminates federal taxes on Social Security benefits for most beneficiaries. So here they are coming back and admitting that it does not eliminate taxes for everybody. The promise was no taxes on Social Security. And don't get me wrong, I'm not saying that nothing was done. I'm just saying that the Social Security Administration should know better when they send an email like this, because it can be misleading, because it's not what was promised, and it does not eliminate taxes on everybody. So then the question is, what is in this bill, and why should you care, or how does it affect you? Well, what they did was a tax deduction. So a $6,000 tax deduction that goes to seniors that make up to $75,000, and then couples making $150,000. So if you do file taxes on your Social Security benefits, then you are going to be able to deduct this next year when you file your taxes. Now, there are other things in this bill that I talked about yesterday in my live presentation, but what I want to talk to you about is that, okay, they promise no taxes on Social Security, but what are they delivering? Well, lawmakers promised Social Security to be tax-free, but that's not what they actually did. Instead, Congress is giving a bonus tax deduction for seniors. So here's how it's going to work. If you're a senior 65 or older, you already get an extra tax deduction, which is $2,000 if you're single and $3,200 if you're married and you are both 65 plus. That is already there. So you get that as a senior citizen, in addition to the standard deduction. Now there's a new bonus deduction that seniors get, $4,000, which was included in the House bill and was increased in the Senate bill to $6,000. So this stacks on top of the standard deduction, which you probably already know is $15,000 for singles and $30,000 for couples in 2025. So for most retirees, this could mean hundreds or even thousands in annual savings if you file taxes on your Social Security benefits, if your combined income is high enough for you to file taxes. But if you don't file taxes, then this does not apply to you. The deduction is only for people age 65 and older, but not everyone gets the full amount. It depends on your income. Singles making $75,000 or less and couples earning $150,000 or less get the full deduction. Above those amounts, the deductions begin to phase out. So why not make Social Security tax-free as was promised? Well, despite the promises, the bill does not eliminate taxes on Social Security. And the reason is that there was a rule in the Senate. It's called the Byrd Rule, which prevents changes to Social Security in budget reconciliation bills. This is supposed to protect the Social Security program. Because they were using reconciliation, they needed only a majority vote. But to protect Social Security, the Byrd Rule prohibits Social Security from being changed in the reconciliation process by just 51 votes. The threshold is higher, it goes to 60 votes, and it's supposed to prevent lawmakers from either party from being able to sneak in Social Security changes through the reconciliation bill. And so that is why they could not put it in here, and they put in the tax-free. So making Social Security tax-free would also cost the government over $1 trillion and could speed up the insolvency of the Social Security Trust Fund. What do I mean by that? It means that even though the president promised no taxes on Social Security, that will cost a lot of money. It will cost $1 trillion. And we already know, and I'm about to talk to you about it, the Social Security trustee said that Social Security is going to run out of money by 2033. And I'm going to tell you the real reason why that is happening and what can be done about it. But part of the reason is that if this no tax on Social Security had been implemented, then it will speed up by 1 year how soon the Social Security Trust Fund will run out of money. So instead of 2033, it will be 2032. That's why Congress chose to offer a bonus deduction instead, which also expires sooner. So the 6,000 tax deduction for singles and 12,000 tax deduction for couples expires in 2028 when the president is out of office. So it is less expensive to offer a tax deduction when you're also offering it for 3 years. So that is why the no tax on Social Security could not be included in this bill. Part of it is this rule, the Senate rule, and part of it is also because it's going to cost a lot of money. And the third reason is that it's cheaper to offer a tax deduction that doesn't apply to all seniors, and then also offer it for 3 years so that it sunsets once the president is out of office. Now, there are other things in the bill that we haven't talked about or a lot of people are avoiding, but I want to talk to you about. There's changes to Medicaid, SNAP, and other programs. The bill changes Medicaid funding, limiting how much states can tax hospitals. And there's work requirement for Medicaid. So if you live in a state where Medicaid was expanded and you are an adult without dependents, and most seniors fall into this category, that's why I want you to pay attention to this, because a lot of seniors feel that Medicaid does not apply to them, but 1/3 of seniors on Medicare are also on Medicaid. And the work requirement for Medicaid has been increased. So any able-bodied adult without dependents must work at least 80 hours a month in order to get Medicaid and food stamps. So the changes could mean a reduced benefit or loss of coverage for millions, as specifically 16 million people, including 5 million seniors, are at risk of losing their Medicaid coverage. Now, as I mentioned, there are other things in the bill for seniors that are interesting. There is a SALT deduction. So if you live in a state that has high taxes, you get to deduct up to 40% of your state and local taxes, not 40%, 40,000 of your state and local taxes from your federal taxes. So that's supposed to help you get more money back. If you are a senior that is working and getting overtime, you can deduct the first 12,500 tax-free. If you're working and you get, tips, you can deduct the first $25,000. All those things expire in 2028. So we're going to have this conversation all over again in 2028 when the tax deduction for seniors expires, when the no tax on social on tips expires, and when the no tax on overtime expires. We're going to have this conversation again. So the email that the Social Security Administration sent pretending that this tax relief is permanent is actually not. It's a temporary relief that eliminates, reduces taxes for seniors on Social Security, and it only lasts for 3 years. That's why a lot of news organizations were calling them out on it, that it was misleading, and that's the reason why. Now, I want to talk to you about the Social Security trustee and the letter that the trustee sent out that the Social Security Trust Fund is going to run out of money soon in 2033. And the reasons that they provided may not all be the complete story. So I want to share with you. So, the trustee latest report, which is available to you. You can go to the Social Security website and type in the trustee latest report and it will pull it up. So the trustees latest report says that 2033 is when benefits are going to run out. When that happens, they are going to be able to pay only 19. They're going to cut benefits, Social Security, disability, spousal benefits, survival benefits. They're going to cut them by 19 to 23% for everyone. There is no grandfathering. So even current recipients will be affected. And that's why I wanted to talk to you about this, because some seniors think this is for future retirees. No. Everybody receiving Social Security and disability benefits come 2033, if Congress does not do anything about the shortfall, will get up to a 23% cut in their benefits. Now, usually they will tell you that is because of demographic issues. But here's the thing. I think stagnant wages have been a problem because wages have not grown dramatically, so less money is coming into the Social Security system. And they're saying that is because people are collecting Social Security for a longer period of time. So let's talk about how the system works. Workers pay into Social Security, and this year, if you make up to $176,100, you have to pay Social Security. But if you make above that income, you are not taxed. So that is one of the real problem of the system, the way it's designed, because it makes lower income and the middle class contribute all of their income. In terms of all of their income is taxed for Social Security. But then for the higher income population, only a portion of their income is taxed for Social Security. This is just the fact. This is not politics. I'm just stating the facts. So if you make $176,100, you are going to pay taxes on your Social Security. If you make more than that, all that income above that does not get taxed. So since the 1980s, tax policy and wage stagnation have funneled more money to the wealthy, starving Social Security of revenue. That's just a fact. Wages have been stagnant, and Social Security does not tax people above a certain threshold. So politicians are blaming seniors for, living too long or not having enough kids, and saying that there's demographic issues. And that is true. It is true that less people are working now than are paying into Social Security when about 40 years ago. It is true that, the birth rate has dropped dramatically in the United States. And so that is also affecting how many people are contributing to Social Security. But there are other issues that trump these two factors. And the first one is what I mentioned, that wages have been stagnant. So if wages are not growing fast enough, then less money is going into the Social Security Trust Fund. And another issue is that Social Security is not taxing individuals who make more than $176,500 from the 2025 level. So by simply raising the cap or removing the cap completely, the entire Social Security problem will be solved. And so to say that not enough people are contributing and that seniors didn't, not enough money is coming in because people are collecting Social Security longer, which is true. And that, people are not having enough babies. And so less people are contributing to the system. That's also true. But there's a financial aspect of this that is being ignored, which is the fact that if you just eliminated the Social Security cap, you will solve this problem. And so I wanted to highlight why this is important. So when you hear them talking about Social Security is running out of money because seniors are living longer, you have proper context of how this is happening. So don't buy the myth that Social Security's problems are your fault. It is because they have not done the hard things that need to be done to bring in more money into the Social Security system in order to protect the system for seniors that need it. And that 23% cut that is coming in 2033 can be avoided if they increase the cap. Now, one thing they can do also, if they want to protect Social Security, they could also increase the Social Security tax rate. If they don't want to increase the cap, they can increase the Social Security tax from 6.2% to 8.2%. A 2% increase over 6 years will also solve the problem. And so it's basically in the hands of politicians to figure this out if they want to. Now, let's talk about one important questions I've been getting about the big beautiful bill regarding home ownership. And I've done the research, and I'm going to talk to you. If you own a home or you know somebody that does, stay for this part because I'm going to explain to you how the big beautiful bill affects homeowners. So the good news is that the capital gains exclusion on home sales has survived. And so you can still exclude up to $250,000 in gains if you are single, or $500,000 if you are married jointly, filing jointly when you sell your primary residence. This means that most homeowners would not pay federal taxes on profits from selling their home as long as they meet the home ownership and residency requirements. So that is very important. This part, there was a lot of worry that it was going to be scrapped out of the bill, and it survived. So you can deduct capital gains up to $250,000 if you are single, $500,000 if you're filing as a couple when you sell your primary residence. Now let's talk about mortgage interest deduction. Mortgage interest remains deductible, but only on mortgage balances up to $750,000. So the previous limit was $1 million. So that they've reduced it, but it's been unchanged from recent years. If your mortgage is under the cap, you can still deduct the interest on your tax return. So this is a neutral change for most homeowners, but keep in mind that when you have high property values, then this is a problem. Moving expenses. The deduction for moving expenses is still allowed under the new law. This means that you cannot deduct moving expenses on your federal taxes except if you are in the military doing specific kinds of moving. This rules continues from the previous legislation, so nothing has changed yet. A lot of people were interested and thought that they were going to expand that rule so that more people can deduct moving expenses. Well, that did not happen. And so we are back to where we were before. An additional thing that happened, which I think a lot of people are going to be interested if you're in the high income category as a senior, is that if you're living a lot of inheritance, property, money, and you are living up to $15 million, this is for seniors in the high income category, you can live all of that tax-free. That is an increase from $7 million. So in my opinion, this bill does a lot for people who make $200,000 and above, because you get to deduct, you get a $12,500 tax break. If you make $1 million, you get about $188,000 in taxes relief. You can get $15 million in inheritance tax-free. If you live in a high property or high income tax state, you get to deduct $40,000 in state and local taxes. So essentially, the bill does a lot for high income seniors. Low income seniors are the ones that are left out of this bill. I did a whole video on that yesterday, so reference that video. But I wanted to come on and talk about the email that went out from the Social Security Administration that was misleading. If you got it, I wanted to explain to you what that meant and what the real deal is, and the fact that, yes, some tax relief has been provided for seniors that pay taxes on Social Security, but Social Security benefits are still taxed for a lot of people, and you will have to wait. It's not an immediate relief. You have to wait till you file your taxes to be able to see how much relief you are going to get. So if you have any questions at all about what I just talked about, or anything about the big beautiful bill, or you have any pressing Social Security, Medicare, Medicaid, food stamps questions on your mind, let me know in the comment section below. I'll be back live tomorrow, same time, and I'll see you tomorrow. Thank you for watching.